Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Obviously, the big news is the conflict in the Middle East. Now, there appears to be conflicting sort of reports coming out of the White House about how the conflict actually started. Trump is obviously claiming that the US, had a preemptive strike against Iran. But it looks like potentially Israel might have given the US a heads up that they were, and therefore the US sort of got dragged in on the back of the Israeli attack. I mean, one thing does seem clear that both Netanyahu and Trump seem to lack sort of authorization for this, because there's been no sort of authorization from the UN, and certainly from the US perspective, Congress has certainly not given Trump any authorization. So it'll be interesting to see how that plays out from Trump's perspective, because once again he seems to have acted and then sort of waiting for the confirmation of his actions. Now, obviously, the big question is how long this conflict is going to last. Because certainly if it does get dragged on for quite a while, and Iran has said it's closed the Straits of Hormuz, which really accounts for about 20% of the world's oil supply. So if that's a big disruption to that supply, then that has major implications for the global economy. And what is quite interesting as well, obviously, Israel was claiming that Iran had the ability to build nuclear weapons. Supposedly that was sort of destroyed with the attack last year from the US. And as yet, there's been no evidence to suggest that Iran did have the nuclear weapons capability. Now, obviously, from Trump's perspective, this has deflected yet again from talk about the Epstein files, and they've really sort of moved to the back burner now. But also, as well, it's taken out of the press the Supreme Court ruling against Trump's tariffs. The increased inflation in the US, certainly PPI, was stronger than anticipated. And also the weaker economy. GDP came in at 1.4 versus expected 2.8. So supposedly for the strongest economy out there globally that Trump claims, that's really not the case from the data coming through. And what will be very interesting to see how Trump spins, because obviously with the oil increasing by around sort of 15% after the conflict started, that's going to ramp up gas prices in the US. Now, Trump so far has been pretty loose with the actual reporting of gas prices, claiming that they're below $2 in some states. Trump has been claiming that gasoline prices are, way down in the US, and in some states are below $2, when the actual average price in the US is closer to $2.60. With oil up around 15% now, you'd expect that those gasoline prices will rise to around sort of $3. Now, getting back onto the earnings side, Nvidia reported some pretty decent earnings yet again. Interest rates in the US pretty interesting as well. I mean, once the conflict started, there was a potential sort of flight to quality, and that 10-year got below 4% at around 394, but it's currently back at 406. The 30-year is 452, and the 2 years around 340. Now, again, potentially it will be interesting to see what this does to the Fed's thinking, because, with inflation already running above their sort of 2% target and likely to increase slightly as, oil increases, although that's going to be sort of a temporary short-term issue. but still not really looking for any cuts from the Fed until potentially June, if not later. And obviously what it has done as well is sort of had a major disruption on global flight plans. Also as well, we've got the big Chinese policy meeting, and it'll just be very interesting to see what comes out of that, and indeed to see if they do make any mention of the Iran situation. Now, as mentioned, oil has sort of spiked above sort of $70 now, currently around sort of 74.80 and change. Now that's up around 15% since this conflict started. Really just all sort of hinges on the sort of supply side. I say, the Straits of Hormuz, that accounts for around 20% of the global oil supply. Now in the UK, a little bit of stronger data coming through. Retail sales was up 1.8%, which was much stronger than anticipated. Although the UK PM Keir Starmer has faced criticism from Trump for not allowing the US to use some of its bases for the Middle East attack. Now in the EU region, it's just another conflict to sort of try and come to terms with. Obviously you've got Russia, Ukraine, and now you've got the Middle East as well. And certainly not all of the European countries are sort of comfortable with Trump's actions. Indeed, Spain has refused to let them use any of their bases, and Trump has come out and said we're having nothing to do with Spain, we're having no trade with Spain now because of that decision. Now in Australia, it's going to be interesting to see what happens with their inflation data, because obviously with oil increasing, while it's good for the sort of oil producers in the Australian economy, it does pose some major issues for the Reserve Bank. Because certainly that inflation data was running hot, and I say with oil increasing, potentially it could sort of spike up over the next sort of couple of months. And it's just a question of whether the Reserve Bank can sort of look through that and sort of view it as transitory and sort of temporary, or whether they look to increase rates further. Now in New Zealand, certainly not immune to the rising oil prices, and that's going to put further pressure to the cost of living. But that is certainly being helped by lower rates, so mortgages are being reset at substantially lower rates. And also as well, over the next sort of 3 to 6 months, you've got the Fonterra payout from the mainland sale coming through as well, which potentially could be around sort of $400,000 per shareholder. And economists and analysts are expecting that quite a bit of that will be spent. So with the housing market picking up as lower rates are sort of starting to impact mortgages out there now, it's just going to be interesting to see how it sort of plays through. There are some pretty encouraging green shoots coming through in terms of optimistic sort of responses to surveys, etc., over the next sort of 3 to 6 months. Now that just needs to be translated into actual growth in the economy. Indeed, interesting, some of the banks now have started to cut their sort of 4 and 5 year mortgage rates after the recent Reserve Bank meeting that maybe sort of poured a little bit of cold water on the potential of a rate increase towards the year end. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.